Welcome to a masterclass built around a single powerful premise. The market leaves clues in price long before lagging indicators catch up. Right? This course is designed to give you that edge. The core promise is simple, yet profound. We will teach you how to interpret the market directly from the source, the candlestick chart itself. You will learn to see the real-time battle between buyers and sellers, enabling you to make faster, more informed decisions without being overly reliant on the slow, often confusing signals generated by secondary tools. For many traders, especially those just starting, the chart can feel like an intimidating wall of random noise. The natural response is to seek certainty by adding layer upon layer of indicators, hoping that one of them will finally give you a definitive buy or sell signal. But this approach often leads to what traders call analysis paralysis, where conflicting signals create confusion rather than clarity. Our philosophy is different. We believe that by the time an indicator confirms a move, a significant portion of that move has already happened. The real opportunity lies in learning to read the price action as it unfolds, candle by candle, moment by moment. You will learn to see a long wick not just as a line on a chart, but as evidence of a failed breakout or a powerful defense of a key level. You will see a strong candle body not as a colored block, but as a statement of conviction from either buyers or sellers. Instead of asking, "Is the RSI overbought?" you will learn to ask, "Are buyers showing signs of exhaustion on this candle?" This shift in perspective is what separates consistently profitable traders from the crowd. By the end of this course, you will look at a chart and see a dynamic story of supply and demand, fear, greed, and you will know how to use that story to your advantage. The entire philosophy of this masterclass is built on one fundamental truth. Price comes first. Every indicator you have ever used is a derivative of price data. They are not predicting the future. They are summarizing the past. A trader who learns to read this evidence in real time can often see the subtle shifts in momentum before any indicator has had time to process the data and generate a signal. Every single candlestick on your chart is built from four essential pieces of information: the open, the high, the low, and the close. The distance between the open and the close forms the real body. The areas above and below the body are the wicks or shadows. If the candle closes above its open, buyers won the round. Conversely, if the candle closes below its open, sellers won the round. A long body indicates strong conviction and decisive action. A long green body shows buyers were aggressive and held control from open to close. In contrast, a short or small body signifies indecision. It indicates neither side gained a meaningful advantage. A long lower wick tells you that during the candle's formation, sellers successfully pushed the price significantly lower. However, buyers stepped in with enough force to reject those lower prices. A long upper wick tells the opposite story. It means that buyers were initially in control, but before the candle closed, sellers emerged and overwhelmed the buying pressure. The wick shows you where the market tried to go and failed. And failure often matters more than effort. To make this practical, think of each candlestick as a single game within a larger playoff series. The closing price is the final scoreboard for that game. However, as any sports fan knows, the final score doesn't tell the whole story. The wicks and the body of the candle provide this narrative color. When the battle between buyers and sellers ends in a perfect stalemate, a doji is formed. A doji is characterized by an open and close at or very near the same price. However, there are important variations. A doji is rarely a trade signal by itself. It's a critical warning signal. After a strong trend, a doji often warns the dominant force is losing conviction. The hammer is one of the most recognizable and powerful bullish reversal patterns in candlestick analysis. Its structure is defined by a small real body near the top, a long lower wick, and little to no upper wick. It is a vivid depiction of a failed attempt by sellers to continue a downtrend. The ideal context for a hammer is after a significant pullback or downtrend. Its predictive power is greatest when it appears at a logical support area. The shooting star is the bearish twin of the hammer and serves as a potent bearish reversal signal. Its structure is a mirror image, a small, real body at the lower end of the trading range, a long upper wick, and little to no lower wick. This pattern is particularly powerful because it creates a population of trapped buyers. As the price moves against them, these trapped buyers may be forced to sell to cut their losses, fueling the reversal. This is one of the most important lessons in the entire masterclass. A candlestick pattern means absolutely nothing without the proper context. A hammer candle appearing after a steep, multi-day sell-off is a powerful and meaningful signal. Now consider that same hammer shape appearing in the middle of a tight, sideways consolidation range. In this environment, the pattern is likely just random noise. To build the habit of analyzing context before acting, you should incorporate a simple 3-question checklist. The second crucial question is, where is this candle appearing in the move? The third and final question is this happening with supporting momentum and volume? Your goal is to patiently wait for these high-quality opportunities and ignore the rest. This discipline is a hallmark of professional trading. Candle over candle is a bullish trigger. It occurs when the price of the current candle breaks above the high of the previous candle. Conversely, a candle under candle setup is your bearish trigger. This occurs when the price of the current candle breaks below the low of the previous candle. This simple framework turns your candlestick analysis into a complete decision system. No break, no trade. This 6-step framework is your practical guide to analyzing any chart. Think of it as your pre-flight checklist before taking any trade. If you cannot answer clearly, you do not have a trade. This is the final lesson. Do not trade the pattern alone. Trade the story the candle is telling inside the right context. When you see a hammer, don't just think bullish pattern. Think, sellers tried to push to a new low. They were overpowered by a surge of buyers. Sellers are now trapped and vulnerable. That understanding lets you trade with confidence because you're not just following rules, you're interpreting market behavior. True mastery of candlestick reading won't come from intellectual understanding alone. It will come from dedicated, deliberate practice. Practice away from real-time emotional pressure to forge skill and confidence. A trader's intuition is not a gift. It is a skill forged through thousands of repetitions. Carry this mantra into every trading session. Look at each candle and ask, what is the story here? When you can answer that question, you will know exactly what to do.